a day. So what happened? What the heck happened again in another strong reversal, but on the opposite direction we saw a couple of days ago last week? All right, we're going to talk about why the reversal. We're going to talk about some of the deals that I saw in the market and took advantage of today, and what to expect for the next coming days, especially as we're still looking at a lot of volatility coming for the remainder of this week. All right, let me share with you some of the charts when it comes to the S&P and the 500 and the Dow Jones. Like, man, strong reversal today, because if you look, it was kind of all doom and gloom. What? Pre-market, the Dow Jones was down 300 points, and at some point you can see here on the lows, this was down almost 500, more than 560 points just for the Dow Jones. Why all of a sudden, based on a very, very, very strong sell-off we had on Friday, it was still down today? Because on Friday it was just a reaction, which I believe was an overreaction from the market on a news that wasn't new news, coming from the Federal Reserve about a 50 basis points, which is 0.5% increase in interest rates when they meet next May, in a couple of weeks from now. So that was the kind of the rationale behind the market selling off last Friday. But today it was coming from China, because China started locking down again last week, and middle week, end of the week, we had some news coming from Shanghai and Hong Kong that, yeah, maybe, these lockdowns will not be as bad as they thought. But now it's like, man, we heard news again that it's not gonna be relaxed anytime soon. All right. And then all of a sudden again, maybe coinciding with the news of Elon Musk buying Twitter, now official, with the same time that we have 1 million people tested. This is something I heard. 1 million tested in Shanghai, which is kind of like, an economic city in China, where you have a lot of, factories and big companies there. Well, 1 million people were tested and only one COVID. But just an image, just an image to say that they are maybe doing too much with this whole zero COVID thing. Because if China, which is supposed to be like the growth engine, all right, the growth engine of the global economy, because pretty much everything is being manufactured in China, and we also have a lot of services sometimes coming now out of China, especially when it comes to e-commerce and everything. So if China slows down, because these lockdowns will put people into kind of what we saw back in 2020, then maybe the world economy will already fragile with war and everything, will be also kind of on the brink of collapsing. All right. Now, what you need to keep in mind is that, well, we already have details from the Federal Reserve governors here in the US, based on the Beige book that came out a couple of days ago, last week, that the impacts of war are not as bad as they thought, because people are still consuming. And 2/3 of the US economy is based on domestic consumption. If people are still willing to travel, if people are still willing to buy cars, if people are still willing to buy houses, etc., then the US economy is set to be good. Is it going to be slowing down? Of course, because the tremendous growth we had back in 2020 and 2021 is just not sustainable. Like 28% or 10% double-digit growth, this is just not sustainable. And this was just because of, the back orders, the backfill of everything coming out of the lockdowns. So the reversal may be the reason, maybe explained by this news around the COVID testing in China, proving that, well, things are not as ugly as they think. Or also because we are looking at tech companies that are going to release earnings in the next coming days. All right. So if you watched the channel yesterday, we shared a video about what to expect when it comes to earnings. If you haven't watched that, please do so. And if you're new to the channel, please consider giving a subscribe and a thumbs up if you like this video and find out this is valuable to you. Now, what we need to keep in mind is that the big tech, the Apples, what we call the FANG, Apple, Facebook, Amazon, Google, usually these are kind of cash cows, all right, compared to like the startup of the really high hyper growth companies. These are companies that for the last, 10 years, 20 years, have been consistently growing and growing. If you take, for example, Google with the ads, sector, if you take Apple, just the 3 last quarters, Apple were just tremendously showing strong signs of growth. So people are expecting that these earnings are not going to be as bad as what we saw compared to maybe a Netflix or a Snapchat. All right. So also something to keep into consideration is the fact that, well, people are talking a lot about inflation. I mean, we're all talking about a lot of recession and the economy is slowing down. And this is why I think now is not the time to panic, especially panic sell if you own some of the quality stocks that are still going up and still poised to outperform the market. Why? Because first off, so far, 20% of the S&P 500 companies already reported earnings. And among these 20% of the whole 500 companies, 75% of them have beaten estimates, meaning the growth is still there. It might not be as hard, as strong as it was last year, but it's still there. And if it's still there, despite high inflation, and despite the fact that we have a lot of people still sitting on a lot of cash, because so far this year and last year, I mean, this is the 2 years where we've seen all-time historic highs on people's savings, meaning people have money that they can use even though inflation and prices are still going up. Why? Because, well, stimulus check and people have been saving a lot because, well, if you are sitting at home, locked down and not doing anywhere, you might as well save that money, all right? So if you compile that plus, indicators showing that companies and, factories are still kind of producing at a certain strong pace, then yeah, even though interest rate will increase, I don't personally think, as what we know so far, it's time to start panic selling. And that's why in this current market, today, as same thing as I said last Friday, I've been going on a shopping spree. Why? Because when you do know that this market is overreacting, all right, this market is overreacting, you know where to put your money to work, all right? You know where to put your money to work, because if you put it in a savings account now, you will get less than 0%. So your money might as well be sitting under your mattress, all right? It will not produce anything. On the other side of things, if you want to put it in real estate, well, the real estate market, right now, if you put it in a REIT, or a digital asset and get the passive income in forms of, dividends, well, it's not sure what the real estate market is going to do for the next coming months. So people are talking about, a collapse or correction, which I think is going to be the case. So the only place kind of safer, or the less worse place to put your money to work is in stocks, which is not bad because you have some quality stocks. If you look at just what the market did today, oil, and commodity prices based on the China news with lockdowns dropped significantly, but they rebounded, right? Like, the West Texas index is closing now around $99 a barrel, but at some point today it went down to 95. And if you look at all the major losers on the S&P 500 here, we have Schlumberger and Halliburton. All of these two are oil and gas producers. So these companies, even at 85 dollars a barrel, are still puking cash, are still like tremendously sitting on a huge cash flow producing kind of momentum for the remainder of this year. So based on this, even though oil is kind of looking a little bit bearish now, man, these companies producing earnings in the next week or so, this is an oversold place where it makes sense for you to buy. So I bought a little bit of energy. I bought a little bit of airlines. I bought those kind of stocks that you look at them and you're like, man, this is just too much, man. This is just too much. So based on this, I already recovered a lot. A little bit, but not as quite as the price target on these stocks. So let's see how for the next 2 weeks. I'm gonna keep updating you guys, but I'm positioning myself to make a decent amount of money in these gains, especially as a swing trade. So let's see how things evolve, and I will keep updating you in the next coming days.